a clear indication that the uncertainty is going to continue. Having said that, the situation is better than 2010.
Global corporations realize that the macro situation is going to recover rather slowly. So I think the projects are going as per plan, decisions get taken, and discretionary spend is beginning to happen. We remain positive that this is going to be a better year than last year.
The three-day annual Nasscom event ended today with lots of takeaways, new projections, trend spotting and fresh debates on the whole. Nasscom is cautiously optimistic and says 2013 would be a good year, with exports growth expected at between 12 and 14% this year. But the headlines this week have focused on something entirely different: growing calls for a makeover of the lobby group to reflect the changing dynamics of the sector. Joining me to get a 360-degree perspective of how we should be all reading into this is a very eminent group of experts. We'll get you views from Krishnakumar Natarajan, co-founder, CEO and MD of Mindtree, also Vice Chairman of Nasscom, and Aruna Jayanti, CEO of Capgemini India, who I spoke to earlier. Joining in live, Avinash Lel, Senior Vice President and Head of Global Strategy, L&T Infotech; Sharad Sharma, CEO of Brand Sigma and co-founder of iSpirit, a new body of 30 IT product developers; and Sudin Apte, the Principal Analyst and CEO of Offshore Insights from Pune. And before we begin our debate on We Mean Business, the top story of the day: petrol and diesel prices have been hiked effective midnight tonight. So petrol would cost about a rupee and a half more. Diesel prices have gone up by 45 paise a litre. For more details on what this means in terms of the under-recoveries, especially on diesel, let's get in Rajkumar.
Well, the final cost will be a little bit more than 45 paise for diesel and 1 rupee 50 paise for petrol, including the local taxes. But yes, this is a welcome relief for the oil companies, because they were actually wanting to hike the price much more than this. But we know that the government have allowed them to hike the diesel prices at least by 45 to 50 paise per litre every month. So it's a relief from the earlier stance of where there was no hike and they used to lose about 11 rupee per litre on diesel. So this is a welcome move from the government, and finally it looks like the government is going to implement this decision of 50 paise, 40 to 50 paise price hike for diesel every month. As far as the petrol is concerned, this is 20th hike since 2010 June, when the petrol was deregulated and it was market linked. And in between there are 9 price reductions also. So 29 revisions have taken place since 2010 June. So all in all, it's a welcome move, and it looks like the government is actually now serious about implementing of wiping off all the subsidies from petrol and diesel at least.
As far as diesel is concerned, the government has taken a very bold decision, a very pragmatic decision, that they will not burden the consumer in one go and raise the price in a staggered manner, so that under recovery goes down over a period of 1.5 to 2 years. And in so doing, there will be no burden on the consumer, and it will be good for the economy, and it will lessen the burden of the oil company as well as the exchequer. So that is the decision government has taken, and we are going ahead with that.
And before we, in fact, get the live debate going, I spoke earlier to Mr. Krishnakumar Natarajan, Vice Chairman of Nasscom, and Aruna Jayanti, CEO of Capgemini India. I began by asking KK what really he made of the Nasscom outlook for next year and whether there was cautious optimism in the air. Listen.
I think the Nasscom outlook for FY14, which is 12 to 14%, is very realistic. It is based on what I think member companies are seeing, that there's clearly a positive momentum on the demand outlook. Clearly, I think in comparison with the last 12 months, conversations with key outsourcers is indicating that they're starting to look at investments in technology being on a far more positive note. Beyond that, even if you look at data which has been put out by market analysts like Forrester and Gartner, they're indicating that the technology spend for calendar year 13, which will be for FY14, is certainly going to be higher than last year. So overall, I think if you look at discrete data points and make a judgment of how the demand is going to pan out for FY14, it at this point in time certainly looks to be far positive, and the Nasscom outlook of 12 to 14% certainly seems to be a very realistic and the right sort of number.
Right. So also give us a sense of some of the key trends that are likely to shape next year. There's been a lot of talk this time around about non-linear opportunities that would be driving growth.
See, clearly some of the key elements which are happening is customers are clearly wanting to use technology to drive transformation and obviously really remodel the way in which they're thinking of the business. So clearly the transformation agenda is going to drive IT investments. Beyond the transformation, there is the new disruptive technologies in social media, mobile, analytics and cloud, which are also driving new demands, because increasingly I think enterprise want to reach to their customer's customer and really leverage some of these trends to provide new customer experiences. Also, we do see that the non-linear revenues of the Indian IT companies are clearly on an uptake. So platform-based services or IP-led services is also leading to better growth. And beyond that, I think today we are seeing new vertical segments which are opening up. Clearly we've been tracking that there is going to be far more larger IT spend in government and public sector, which is going to be an area of focus for the Indian IT industry. Healthcare is another segment where there are going to be major changes which are going to drive new demand. And there are also new markets which are opening up. If you've tracked the market growth of the Asian markets, they've certainly been far more robust than practically Europe and North American markets, which are big. So I think we'll continue to see increased demand in new markets, in new vertical segments, which is going to drive demand.